right? So that loss in there was stupid. We had a 15-minute valid high candle, or sorry, valid structural candle in the 15-minute. We failed above it. Guess what? We're trading below it. So that was stupid by me to get involved in here and then swept out violently. But how beautiful was that long? Made a hell of a lot more than what I lost. That's the idea. That's the idea. Right? So it's these walls. And then eventually, once that started, and by the way, your story helps immensely with this. How you relate to money and success and wealth and everything like that. But in reality, too, in terms of a trading journey, you've got to get your strategy first. Then we work on psychology of being able to stick to it and the reset of your mental state and all of that. And then we break through limitations, and then all of a sudden we start bouncing, and eventually you end up consistently profitable, which is the end goal. How wild. The end goal is what we want, that you guys actually don't need us anymore. So let's get into post-market. Let's get into post-market. We started the day. By the way, that 15-minute sweep was actually there. I was looking at it on the 5-minute, but same sort of idea. We started the day violently trading down. Trading down to where? We have a daily low. What are the chances that that gets taken in a higher time frame movement down? With a low, a low, a low, a low, a low, a low, a low. Look at that. How beautiful is that? Right? Right from midnight, gone. And what else happened? So number one, we took this low. We'll get into the price action we're looking at lower, where we're talking about it on stream going, I don't like this. And what else do we have? We had a midnight open that hadn't been touched since 3 o'clock in the morning. We've talked about that a lot. Option strategy, which we will be doing a lot for those interested in the coming months. I've got a lot of back testing to do before that's released, and the options account will be fueled by this Apex payout. Now, what's important here? It's not necessarily important that this candle closed bullish, because this certainly had follow through. What do we need here? We need a validation. And we did. Our 15-minute our 15, goodness, Kev. 15-minute candle, right? Closed above this, valid low. So we had our sweep, traded above, attempt back down, got embarrassed. This was the first trade in the morning that netted us 700 points or whatever it was. All right, so we've got this. Here's your 15-minute. Validated. Validated here. Traded back into where? The imbalance. So what ended up happening here? We had an order flow, 9:30 in the morning. Bang, 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 broke. Traded back in. Find an area of interest it's going to trade back into and risk accordingly. And then it leaves, breaking that high. Quick and painless trade. Let's go. Right? Now we have an area of interest. Why? Because this is a valid structural move. You got a swing here. Did we make a valid low here? In fact, we did. But this didn't put in a new low. Right? Not even a valid high there. So this was actually one swing. Right? You could argue that it actually broke structure here, and it did. Right? This was a structural high. But again, I was looking at the 15-minute. That failed to validate on a 15-minute time frame in the morning. It swept above and then careened lower. But it failed to achieve anything. Right? So what ended up happening? We broke it. Also breaking structure. Trading back into where? The SNDR. Boom. That was your second trade. And now you have internal failure. So now, I think I actually took a small loss in here. But in reality, I shouldn't have gone long after this sort of failure. What I didn't like was how weak this movement was. And in fact, it had to come back down to liquidate the SNDR. It actually made equal lows there at 63, I believe. 63. And then blasted higher. Right? So avoiding this long, I think either I would have wanted to be in on the change in order flow, which would have been here. But I didn't really see this as a break in order flow, so I think that's a little bit more advanced of a nuance. Essentially, I'm looking at avoiding trades based off of this until we get a change in order flow. And that really happened here. Traded back up, traded back in, left. And so I know some of you guys that live took that as well. So that would have been a much safer trade where we've had our attempt to sell off. We achieved nothing. I didn't really like the equal lows at all for longing off of, but you get accumulation, manipulation, blast. That's beautiful. I think that's valid. Now, again, continuing on, we've got structural high here. Here's your swing. Snap. Sweep. Okay, this is the market telling us possibly going lower. Right? Increased probability now. Sweep and fail. Trading back in. Sweep and fail. Trades back up. Now, the error that I made was I looked at this, and those of you guys that were on the stream as well, I had a very, very good opportunity of taking this off here. And it was slightly idiotic of me to not do that. And the reason why is because the first trade should be, fire it in the chat, guys. How often do I say? How often do I say it to myself? First trade, scalp. So treating this trade, where I'm in at wherever it was, as a swing, despite the area of interest that I love, despite trading into the SNDR, should not be doing that, should I? And as a result, I gave away, this went from 16 to 35, right? And came all the way back down. Not only did I not take it off, I actually allowed it to run to my stop, which promptly got taken out at the 15-minute low, which had then swept. So not only did we have a draw lower, but I was in a trade that was up $400 per contract, and I allowed it to come back. Now, I mention all this for a couple of reasons. Number one is that I want you guys to learn even from the mistakes that I make, which is the entire reason that I stream live. It's definitely not for any sort of reason of like, look at me sort of thing. It's to showcase multiple things. Number one is trade ideas and the execution of them. Number two, primarily, is that we don't need to be perfect to make a lot of money in this market. We see that consistently, right? Those of you, especially those of you guys that have been around for a while, you see the consistent payouts that we generate here. They're not without their losses. But what is devastating would be if I held on to this and said, you know what? I'm actually not going to have a stop in at all. Or an idea at all of where I'm about to get out. I'll just add in here and that ends up making money. Great. That idea would have worked out today beautifully. And I probably, based off the trade idea, if I had known or at least made the consideration of if it sweeps the 15-minute and fails, now I can justify getting involved. And I know a lot of you guys actually hit this here, which is beautiful. You guys traded this a hell of a lot better than I did, which both delights me and pains me to say, right? But the devastation would be if this traded back down to here, valid. If this swept the equal lows out and then ran. And now I've got a 60-point drawdown trade that I'm holding out of stubbornness rather than strategy. That's where account destruction comes in. Been there, please don't do it. right? What's far better is, well, number one, actually trading this properly, which would have been a 10 to 20 point scalp. At minimum, 1-to-1 off of the that candle there. And the reason, by the way, that I had that drawn is because we actually swept and then closed above. This is a bullish engulfing candle, so we expect price to return back down to that fractal, this bearish high and that bullish low. We expect price to return down to it. We expect buying to be generated off of it. In this case, it was inducement, but I'll take that trade tomorrow even then, right? I'll take it for a scalp tomorrow. Well, not tomorrow because the market's closed, but you know what I mean, right? And then we get to the banger. So, pretty clear to see until proven otherwise, right? What's proven otherwise? Well, a good place to start would be a higher time frame movement down, right? Not of the 1 minute time frame. We've got one, you could argue two bearish candles with any sort of significance to them. You've got one here, and we saw what happened there. You've got one here, we saw what happened here. What's this like? That's a little bit different, right? That's a little bit different. And you could even make the argument that we accumulated here just to drop back into our first 15-minute range. Guess what's going to be on the chart that I'm going to post for you guys as study and review later on? Trade up. Ideally, this would have hit the extension. Dennis still had a banger short out of it, but the expectation would be to trade back into the 15-minute range and then higher. And I'm pretty sure I think I saw that that you grabbed a ridiculous long out of it as well. I don't know if that was in here, if that was here, or whatever it was, but absolutely beautiful. And we'll walk through how I would have taken that long as well had I still been trading. Now, the idea behind this long, obviously we're still long. We don't have a higher time frame push down, so I know there's no higher time frame sponsorship. What else do we not have? Well, we don't have any accumulation and manipulation at the high. So, are we expecting this to be a higher time frame reversal? No. No, we're not. Or at least having no two legs down. By two legs, I mean something like this, where you have a push, a retracement back in, right? You could argue an advanced break in order flow. I didn't really like it because this was predominant. And then your second leg down. This was kind of lethargic, liquidity, spiked back up. How violent is this movement? Pretty violent. So what do we got? We got move down, a low, a high, a low, a high, trades back in, gone. Right? So sizing accordingly, ideally, whereabouts is our trade? Probably something like this. In here. Now, I think as well we had it on stream too. Shocker. Which ended up being the adding opportunity that we had. Right? Which I did add. Because my first entry, honestly, was inside of this, and it was horrific. Right? I kind of saw that, and then I actually held when I was doing it. I probably should have just been break even or something like that. Right? Not wild about the execution on the first one. Honestly, I was expecting something potentially going on like this, and I didn't want to miss it. I knew where it was going, and it nearly cost me, but the idea was that this wasn't coming. Right? I thought we might have already had our trade back in. So that was my fallacy. However, the narrative definitely on point with that. Now, what ended up happening was we traded up, sideways, dropped in, right? How violent? Very. Did we make a valid low? No. So this area would have been our consideration. Obviously a huge area, and obviously we chopped around in there for a while, but when you're looking at this, even though this was inside of our pocket, fails to validate a low, and then sure enough, down we go, right? Attempt to rally, nope. Trades back in, gone. Gone, gone, gone. We don't expect this. So here's an interesting thing. If we're here, what takes precedence? You've got Strong move. Low, high, low, breaks, trades back in. Should we be expecting this? Right? And when do we not? When do we not? We certainly have a valid low here. That failed underneath. That's important. Why? Because this is a structural move back up to where? Nowhere, really. All this was intermediate time frame accumulation, which and then ended up manipulating. This is why Mikey will lean very heavily on 15-minute sweeps. And structure. We don't really have any accumulation manipulation. You do have a change in order flow, but there's no accumulation and manipulation here. This actually just ran up and did nothing. Came back down, and you're seeing these attempts to rally that aren't generating order flow. Down we go. Now we've got our 15-minute. Maybe. Right? Now what are we looking for? We're back down into this area. Cool. We've now got your SNDR. Now we've got somewhere structurally. You could argue as well, we've got an imbalance here. Where do we trade back into? Why is that important? It's important because we go sideways. We accumulated here. If we're going to manipulate and run higher, we're going to respect this inversion. So this is a very aggressive trade. You'll also notice we've got a nice little signature in price. We trade lower, spike, and follow through. So buying definitely generated from that. Beautiful. Bang. Where do we trade back into? Shocker. But that was immediately bought up. That actually was very, very dangerous of getting everybody involved. Right? This was a liquidity run. And it wasn't until that failed, in my opinion, and we had some follow through from it, that everybody realized they were on the wrong side, or at least they should have. Right? We didn't get our 15-minute sweep, that's true. But we had an intermediate time frame accumulation, clean manipulation leg, and now we've closed above it. We trade back in violently. Not always, it won't always be that violent, which is why we don't just hop in on whatever we see. But if you're adept with structure, you're expecting that trade back in, maybe a sweep, maybe whatever. And as this comes back through, you can hit it here. With the idea that if we're going to manipulate, and it's true, well, guess what? Especially if you're swing trading, you've got this liquidity sweep. Maybe you hit it somewhere in here. And if you're right, you're making 43 points at minimum. If you're wrong, you take your stop, and that's a valid swing trade. Right? From a price action perspective, there's no more shorts. Their attempt was here in the SNDR, and it did nothing. Did absolutely nothing. It chopped back down and then was violently bought back up. And then that movement back down, violently bought back up. How eager are they to run the highs? And you would expect the highs, wouldn't you? Even though we validated a 15-minute candle. Right? We've got an intermediate accumulation manipulation. And it isn't really until that structural break. It actually came back down again. That's violent. Woo. Nasty business. Right? I think that this would have been a valid long for sure. And then that probably would have stopped me out break even. And then I would have had a hard time hopping back in. But I think I definitely would have been in somewhere in here. Right? That being a low probability event. Don't really see anything other than the three pushes that might have led to failure there, but gross. Gross, gross, gross. Obviously, there was a ton of liquidity in this fractal. That would have definitely stopped me out break even, and I can't say I would have gotten involved somewhere in here. But anyway. Yeah. Couple of different attempts of breaking structure. That definitely needed to take that low and close. I don't think it did. That would have been a structural area. We're looking at this high once it finally does, and then squeeze center right to the 2.25 and beyond, looks like. Midnight open. There it goes. Violent up, violent down, trades back in. What do we get? Chop? Or does it take it? Took it. Beautiful. Beautiful, beautiful short in there. Now, questions from you guys. Did we get chopped up anywhere? Is there anywhere you guys want to sort of look at from a model perspective? Do we understand really why we were looking here and when to sort of have that as our bias in terms of staying out of trouble in this soup? Do we want to just run away for the weekend? What are we feeling? Yeah, it's going to be a good back test this weekend. Yes, this is very tricky in here. I think that's very, very tricky in mine. So if we get rid of it all, in reality, let's have a look at this. Right? So we tried a couple, but it's probably what happened. This valid 5-minute candle. That's why I'm looking at the 5 a little bit more often, especially in higher time frame movements. We failed to validate here, which probably sent us back down, but honestly in this, okay, we've broken above. Do we have a closure? Yes. So I kind of want to see like us like sort of chop around in here. I wouldn't expect, if I'm involved anywhere in here, for this to come all the way back, but it did, right? So if you're involved there, I probably would have stopped out, break even. And then this sweeping, failing, nasty business, if you're involved somewhere in here, same sort of thing. This came violently back down, and that's just yeah, I would say that's low probability. We wouldn't see that very often. And unfortunately, I think both trades of mine would have been break even there, despite a beautiful area of interest. Pretty hard to be looking that this movement down. You'd have to be very much sort of a level-to-level trader for that. From a price action perspective, this is violent. We don't have a 15-minute sweep. I'd half expect that 15-minute to get taken. Right? Our 15-minute low is here at 80.50. That went to 80.50 and double bottomed, and then this went to 79.25. So we actually didn't sweep any 15 minutes out here. Right? So I think the two trades I would have taken, it would have been on price action failure, area of interest. You can definitely justify the initial reversal, which you might have taken off above that high if you were lucky. I think I would have expected this one to go. And then, yeah, definitely would have been taken off break even with this violent movement down. And I can't really justify getting involved here on that sweep because I would have expected lower. But definitely as soon as this follow through happens, this is, again, a way to the races. And as soon as you get some follow through, now we're break even. And that would have been probably on that closure at 27 with a stop underneath here. So violent stop. But again, if you're right, this is what you're looking at. So we don't need to necessarily be early. We definitely don't need to be early. If you are, excellent. Right? And I think I would have been, again, break even in here. But this is very choppy PA. We dealt with a lot here. That was mitigated twice and then still tried coming down. So this is it's kind of a rare low probability event with that liquidity. And honestly, I would chalk a lot of that up, as lame as it sounds to use it as a scapegoat, but you got quad witching and the flows are a little bit different on these days. The liquidity is very, very heavy. Same with FOMC mornings. right? And yeah, choppy market conditions, not really. I mean, you're seeing what ended up happening, as a result of that. Even this was very choppy, but you're leaning heavily on direction and narrative to make your bag. Okay. Yeah. Back testing Sunday. I'll get you a chart today, and I'll get this posted right now. Hopefully you guys caught some bangers with us. And yeah, congrats to you guys that ended the week strong. We'll see you guys on Sunday. Bye.